Some are there have been some, but not that many. But do they have programs, so we'll say integrate with your accounting system in terms of transferring information over to it? That's becoming more common. Do they have, what are their online capabilities? If you're going to get into the purchase card, if you're big enough to get into the purchase card or corporate credit cards, do they have the management tools online? And some of the smaller banks will not invest in that. And there are differences between the small banks and the big banks in terms of treasury management. Just things to understand and what your needs are. So you're getting more than just a loan, is what I'm also trying to say. Are you going to get the advisor? Are you going to get the tools you need? Is this something that's a long-term fit? And again, key insights into your financing journey. As you are more prepared, it's going to save you time. You're going to be able to narrow in on where you want to go. And, as a small business owner, I've helped run a small business. And I mean, Ed, Dave, Yako, all small business owners. They're all wearing multiple hats during the day. And when you're a small business owner, you're doing everything. You're the bottle washer, the cook, the diaper changer, everything. So by being organized and being prepared up front, you don't have to go back and start chasing things and get interrupted to the tasks that you really were trying to do. That's key. I think it just lowers the stress. It's going to help you get a better price and a better structure, and it's just going to make life easier. So with that, I'm into the part where I ask for any questions anybody might have. I just suggested some topics, and we'll open it up.
Terrific. Thank you, Paul. As always, I am amazed by the depth and breadth of your knowledge. So thank you so much for that. I see Yaku Grobler has a question. Yaku, why don't you go ahead and come off mute and ask your question?
Thank you. Can you hear me, Paul?
Yeah, I can hear you, Yako.
Thanks for the presentation. When I saw the topic, I thought, oh, this is a sort of a dry topic, but you have amazed me with the information that you shared. And as a business owner, I'm at this stage where I'm looking at funding growth. So this is very, very real, very specifically value for me. My question is, I have this thing where I don't really trust banks. And I have a feeling that there are much more fees and costs involved than what I get to see. Is that a feeling, or is that a perception I should let go? Because I feel there's more than just the interest rate. I feel there are a lot of hidden costs, and I would like to know about that.
And that again depends on how big your business is, Yako. As you're a small business, there'll be generalized packages on the deposit side. The deposit side is where a lot of costs can come in, and they start using what they call analyzed statements, which is based on your balances. And instead of paying you an interest rate for your deposits, I give you an earning credit, which is I call it the mythical interest rate. And then each service you use is a charge. There's a charge for a deposit. There's a charge for a check. There's a charge for a wire or whatever. And then that's taken against those credits. And you go plus or minus at the end of the day. But that's where you can find there's differences in the banks. If you have the volume, a treasury management person from the bank should be able to take your current volume and tell you what it will cost, so that it's not a surprise. But a lot of people don't ask for it. I volunteer a lot of times, but a lot of people don't ask for it. The reason I volunteer is because I also can go into a kind of an Easter egg hunt and find out, are there things in your business practices that I can improve on that will save you not only money, but time? Can I automate how you're reconciling your, can I provide you reconciling package? English is not my first language. I always struggle with it. The problem is I don't have a second, or I don't have a first anyway. I was trying to be funny, I'm not. But the point is that do I have a tool that can save you time as well as money, and that you know what the charge is? Because the trade-off is in what labor, or if you have a bookkeeper, if I get them to spend a couple hours less a month. On the loans, they're generally going to be straightforward. I really not seeing any surprise fees. You should have disclosure of everything. Over a period of time, banks have been forced to, by regulation, disclose everything. We just do it anyway. Now, it means you might have to take a moment and read the documents and understand it, but there generally shouldn't be any surprises. In the term sheet, if the banks use a term sheet, and you can always ask for one, some of the small businesses don't. They just, here's your loan agreement. There shouldn't be anything hidden. There shouldn't be too many surprises there. And if there is, you should let them know right away, hey, this is what you promised. This is what I got. How are we going to reconcile these two? Help me out. And we'll be able to take it from there. But I think generally, for the most part, it should be very upfront. These are commodity type items a lot of times in the small business area, to be very honest. We all want to say we're fancy and have customization, but it's really commodity. And so my competition on a commodity, when you have to sell a commodity type item, your competition won't let you have a lot of room not to be upfront and be honest, because they'll come in to take advantage of it every time.
Thank you for that. Just a comment, maybe not a question. So as your comment of, can I make money with the money? That is very significant, because that's a mind changer for me, because I always thought about, it's a cost, and it's not. It's a growth tool.
It is. And a lot of people, especially as they get into alternative financing, don't look at that. And that's where the merchant credit card arrangements, those Max or whatever they're called, they come in and they start charging up to 36%. That's really hard to make money at 36%.
Yeah.
It may fix a temporary problem, but it may be creating a long-term one. So a good asset-based lender, guys who do the ABL factoring and everything, are going to look and say, okay, can that business be sustainable at my rates? And they do that because they want to get paid back. I mean, they don't want to bury you. They want a long-term customer too. They want to help you. But if you have someone who's going to do that, and can you afford this really, then it makes sense. And that's, again, where you have to know your numbers, know your cash flow. I think of a very big unicorn out of San Francisco that I worked on, where the company was growing at a tremendous rate and had a huge amount of VC money and all the top VCs. But I got asked questions by the credit people who didn't understand a venture-backed company about why was the cash flow just break even. And I had to explain, they just expanded in 20 countries. They just hired a couple 100 engineers. They'd be cash flow positive tomorrow if they stopped hiring. That's the things you have to look at. Why and how's the money being spent? And can they just change it back into a bigger cash flow if they change direction, if they pivot?
Hey, Paul, I had a question, and you just touched on it a little bit. But like when you're thinking of an SBA loan versus asset-based or even factoring, asset-based lending or even factoring, I mean, just orders of magnitude, what's the difference in the rates that you could get, or what are you going to be charged for each of those? I know it's deal dependent.
That's a good question, because on the SBA rates, most lenders right now are doing variable rates, called prime plus 2, prime plus 3, whatever it is. But you also, that's where you could end up also seeing fees on the loans and the application and on the 504, they have an insurance fee. They charge you like a 1% fee on the second, so that because they have to, it's an insurance policy in case the first gets defaulted on. And the second lender has to come in and make payments. But let's talk about that for a second, because a conventional loan generally be more flexible, less paperwork, less hassle, should be able to be priced a little bit more competitively. The SBA now, as of June 1st, has undergone significant changes. So SBA operates, unlike banks, which can vary all over the place, SBA operates off of a standard operating procedures, SOP is what they call them, and they change those on June 1st. You're going to have to show that your loan request now, this was an old requirement they brought back. It doesn't fit into conventional financing. They've also changed some of the other rules, and this is where I give a little bit of political commentary, but Trump has struck again, because they also now require that you are a U.S. citizen, where that wasn't being done before. A lot of immigrants, first generation immigrants on green cards and stuff, have used SBA financing to create wonderful businesses. But we're seeing some more requirements.